Hey guys, this is your weekly market recap. I'm Mike Mentor with Financial Synergies, and this is the first week of January 2026, believe it or not, and it's starting off with solid results so far. We're in the middle of Friday right now, so I don't have the closing data for today, but so far so good. What we're seeing this week, so this week's data, it reinforced kind of this two-speed economy we've been experiencing. So you got manufacturing is still a little sluggish while services are expanding. So the ISM manufacturing index stayed below 50. That's a 10th straight month of contraction. But the ISM services index rose from last month, signaling continued job growth on the services side. On the jobs, labor market we're still adding jobs, but conditions are softening a bit. So ADP showed plus 41,000 jobs in December, and that was a rebound from a negative $29,000 number in November. But job growth is still well below 2023 and 2024 levels, which I don't think is any surprise. Job openings fell from 7.45 million to 7.15 million, near the lowest since early 2021. Economists keep calling this a low hire, low fire job market. Markets. So the S&P 500 and NASDAQ were up around 1%. Again, we're in the middle of Friday, so we'll see where it ends up. But the bigger story was really this rotation and broader participation in the market, which is a good thing, really. So small caps, for example, they led this week with the Russell 2000 up almost 5% and hitting a new high. Large cap value and the S&P 500 equal weight index were both up more than 2.5%. While large cap growth was basically flat, and tech was only modestly higher. So the breadth improved too. So the share of S&P 500 stocks above their 50-day moving average rose from 55% to 60%. So all positive there. Risk appetite is still pretty much risk on, but not carefree. Gold is up nearly 3% year to date, for example, even as stocks hit new highs, and the VIX is still in the mid-teens, but it's drifted a bit higher. So investors are cautiously, optimistic. And for oil, it's probably much less action than was expected given the situation in Venezuela. But geopolitics in Venezuela drove some of this action. Oil was up earlier in the week, then reversed lower as talk around Venezuelan supply raised oversupply concerns, and then inventory data didn't really help. Gasoline inventories increased, and oil is still near 5-year lows, which helps to ease inflation pressure, and it can support consumer spending as well. So really the bottom line for this week is manufacturing is a bit weak, sluggish. Services are strong, however, and jobs are cooling but still growing. And market leadership is continuing to broaden out, beyond just your large cap tech names, which is good to see. So I'd say investors are again staying cautiously optimistic. So that's what we've got for this week, guys. I appreciate you tuning in. I'll have a very comprehensive end of year review next week. I'll do a video on some themes and topics that we're watching for this first quarter in 2026. And we'll also recap the the fourth quarter of last year. Also kind of just recapping the entire year. So look forward to that next week. But in the meantime, I hope you guys have a great weekend, and I'll talk to you soon. Thanks.